myself Vaibhav. In today's session of Visual JForex, we will be continuing our work with the indicator named Bollinger Band. I will explain to you how you can design and develop the algorithm using this indicator on the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, the developments so far were including this instrument subscription, where the default instrument is being used to set this condition, where the instrument of choice is €USD. Condition amount was defined at 0. After that, these two blocks of 4-hourly candle period were added. The only difference between these is the shift value. First one is of 1 and another is 6. That means this will be retrieving the data for a different point in time. One for the last 4 hours and another one for 24 hours back. And to look at the price volatility, we are also taking the help of this get historical candle, and the candle period remains the same, 4 hours. Shift value is 1. And on this block, I realized later on that we need to carry out change. This lookback period needs to be changed to 2 from 0, as one of the conditions require that we look for the data starting from or before the last candle period, and the data is being retrieved using this candle, so we can go back in time and change this shift to 2, and its individual variables can be accessed after using this loop viewer. This output value can be accessed after going for this users variable, and all the constituents are present there, available there. To pinpoint the exact entry point, these two 10-second candles will be used, and to set the condition that there should be volatility of more than 20 pips, this calculation was carried out, where using the default instrument pip size and the newly created variable of 20, we have predefined the value. So this output value is going to be the variable which we will compare whenever we have to set this condition. Now I take you to the JForex platform, where I will give you a brief refresher of what the conditions are going to be for the execution of the buy trade. We need to look for the momentum, and we want the momentum on the bullish side whenever we are going in for the buy trade. So what we will do, we will consider the price action over last 2 days. So here this block of get historical candles and candle amount 12, that is being used to retrieve the data over last 48 hours. And if we omit the last 4 hours, then it basically takes us back to last 52 hours since the last 4 hours. So essentially it is 48 hours, and we consider that in that time the candle high, 4-hourly candle high, should have been higher than the upper band of Bollinger Band, and it shouldn't have touched the lower band of Bollinger Band. That essentially means that in last 2 days the price momentum has been tilting in favor of bulls. The price action has been quite bullish, and on the price action front, this is the time to look for the buy trade. And when we are setting a condition that there should not be any any low below this low band, that means that where whichever lows have been formed have been higher lows, and that is in consonance with our requirement that formation should be of higher highs and higher lows. And we also want there should be enough volatility. So what we are going to do, that we will be executing the trade only when we have the price action happening closer to this middle band. So after this high has been made, we need some correction to happen, and as and when there is a resumption of the bullish momentum, again the price action starts to jump on the higher side with good enough momentum. And to measure that momentum, we will be setting the condition that last 4 hours closing and the opening difference should be more than 20 pips, and that's why we had set this calculation expression block to define this value of 20 pips. And whatever is the actual difference between this closing and the opening value, we will take half of it and place a limit order. And we will set a condition that in this instance of moving on the higher side, the last 4 hourly candle high should remain below the upper band and it shouldn't have crossed above it, to make sure that we still have some run to move on the higher side, and we are in position to capitalize on this newfound momentum. So now we go back to the Visual JForex board, and we will have to start with the calculation expression. We will have to calculate the actual difference, and using that value we can set additional conditions. We have to consider the candle 17's closing and opening value. A1 minus A2 is the actual difference which we will compare to this output value. Okay, and to define the stop loss and target price, we are also going to need additional calculation expression blocks. I will only take half of this value. So what we need to do is use the output value and multiply it by 0.5. 0.5 A1 into A2 Now we will go on to define the conditions for the execution of the trade, and after that, once we get these trade command block we will define the variables for stop loss and take profit. That part we will leave to be done later on. We're also going to need one more logical component, multiple action. Okay, now first thing first, we need enough of momentum in last 4 hourly candles price action. It should have closed with enough of gains. So we will compare its difference of closing and opening value with the predefined value. First input greater than second input. Candle 17 is high. Needs to be less than the upper band of last 4 hours Bollinger Band. First input less than second input. And now we will have to take the BHL candle high and compare it to the Bollinger Band value 1 day back. So we essentially have to compare BHL candle high with upper band 16. First input greater than second input. And BHL low should also be higher than the lower band 16. So we will have the formation of a higher high and higher low. Okay, lower band 16. First input greater than second input. We have already defined the minimum volatility condition and also these Bollinger Band conditions. Now we can move on to define the exact entry point. So the order is going to be placed after the closing of last 4 hours, and whenever the price starts to rise above that point. So we have to compare candle 20 and candle 21's closing value with the candle 17 candle close. Here it is. In both these blocks, same input will be required, and then we will compare these two, the 10 seconds data. Okay. And I think one condition which we can add to make sure that we are not really getting involved in the trade after enough of momentum has already unfolded, we can add a condition that this minimum band should have been touched in last 4 hours, middle band. So that is going to bring our entry point closer to this average moving average of 20 EMA. So I will add that condition also. Now prior to that we will set this entry point, and after that we will add this condition. It's fine either ways. So we need candle 20 which has a lookback period of 1 to have closed higher compared to the candle 17 candle close. First input greater than second input, and candle 21 which has a lookback period of 2, it should have closed lower. I think I overlooked this fact that first input is candle 17 candle close, so we have to invert this condition, and in this case first input should be less than second input, and for this block we will need first input to be greater. Okay, and we need candle 17 candle low again, and this should be below the last 4 hours Bollinger bands middle band 12. After this we can bring in the trade command block. First input less than second input. Okay, Now we have to define these input parameters for this trade command block. The order is going to be limit by limit. That means it will be placed lower than the current price, current value. And price is going to be defined by taking into consideration this difference. We have already carried out this calculation to define the half of actual difference, and we will deduct this output value HCL from last tick price to arrive at the actual price of execution. So again, we need a calculation expression block. A1 minus A2 and I will name it BE. We have to put this output value here. Instrument will remain as it is. Trade amount I will change to 0.1 million. Page is going to be 2 pips. Stop loss and take profit, we will keep it dynamic. So whatever is the actual difference, half of it, we will take that as a stop loss and we will take price of it. So actual difference will be our take profit and half of it will be our stop loss. So all we need to do is change this output value, which is in double data type, to integer data type. We essentially have to change the data type, and for that we will have to carry out a new calculation. Take this output and multiply it with the 10 raised to the power 4 to bring these decimal values in the integer format. I have to create a new variable with the start value of 10 grand. A1 into A2 I will create the variable here named SL. Oh, we'll name it BSL as it is going to be a buy side stop loss. Okay, so this is done. Now we have to define the take profit, which is essentially going to be the price of stop loss. All we have to do is take this output and multiply it with 2. A1 into A2. Again, we need to create the variable on the straight command block only, as it needs to be of the double data type, integer data type. And I will assign it here. So whatever is the result of this calculation, that will be its output value. We also have to create a new variable for the order validity. I think order validity of 4 hours or even 8 hours will be good enough, and it's flexible. You can change the order validity as per your requirement. All you have to do is change the value of one of the variable. We take last tick time and add 3.6 million ticks multiplied by the desired number of hours. In 1 hour, you have 3.6 million ticks. So we do have to be careful to get this number right. Okay, I think it is. And I will create a new variable with the start value of 8, so our order will remain valid for 8 hours. This is going to be A1 plus A2 into A3, and this time around the output needs to be in long data type, so we have to consider this variable. I will name it OVT. With this, we have defined all the mandatory parameters. Comment, if you want to add comment, you can add it. Otherwise, even if you leave it blank, it's fine. It's not going to make any material difference. Now all we need to do is join the thread here. But this algorithm is not yet complete. We have to complete its buy side as sell side, which we will do in next session. So for the day, our job is done once we arrange these blocks so that it is easier to understand the trade flow, how these conditions have been defined. If we want to take a look later on, we should be able to easily understand what were the logic used. Okay, and also it looks better. And let me color code this to check whether the iteration flow is going till the end or not, and it is. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage on market developments, you can check out our Dukascopy Analytics page. Whenever you want to start trading, you can simply download the JForex platform, and it's quite simple to use. We are also available on the Facebook. You can join our Facebook page. Thank you all for joining in. See you next time. Till then. Goodbye.